And so, one of the things, and Yelisey, you talk about this all the time, but for those that are interested in the country's debt, they can go to usdebtclock.org, and it actually gives you second-by-second updates on how much our debt is, how much that is per citizen, and how much debt we have per taxpayer. One of the interesting numbers I thought is that we have 104,000 and some change of debt per citizen, but 268,000 per taxpayer, which means over half of people are not paying taxes.
Yeah, well, I mean, that includes children too, right? So
I think they should be paying their fair share.
Yeah, they need to. We need to step it up and help us out. On the topic of inflation, last week I mentioned the Jackson Hole Economic Symposium, right, where all the hundreds of economists, central bank officials, journalists, everybody around the world, they gather together to discuss, all the most pressing economic issues. So the Federal Reserve Chairman, Jerome Powell, he had a speech which was, very much anticipated, and where he's suggesting that we are going to cut interest rates from their 23-year high. And really the more interesting part was we're going to shift the focus from inflation to rising unemployment, right? If you remember the jobs data that came out comparing July to June, we had a bit of a hiccup in the market. August 5th being the worst day in the market since the last 2 years, right? Since 2022. But one thing that I found interesting is, and actually I've known this a little bit, but I didn't really dig into it much. But Trey, there's actually 6 different measures of unemployment. Wow. 6 different measures, and actually they go from U1 to U6. And whenever you hear somebody on the news or somebody talking about unemployment and rates are at this level or that level, really no one really goes into more detail than that. They don't tell you whether they're talking about U1, U2, U4, 5, or 6. And really there's a big difference between those. And a lot of the pushback from some of the economists that I follow is, hey, whenever they're reporting unemployment, they're not looking at people who are discouraged workers. And what do we mean by discouraged workers? These are people who are not part of the labor force. They want to be part of the labor force. They're available for work. They've looked for a job sometime in the last 12 months, but they're not counted as unemployed because they haven't searched for work in the last 4 weeks. Wow. All right. So there's a huge percentage of people that are underemployed, that want more employment, that are seeking employment, or maybe they just think that, hey, there isn't an opportunity for it. But if you consider U6, right, underutilization 6, right, the measure of employment that does look at discouraged workers, it's actually 7.8% in July. And it's going up. So I thought it was interesting that Jerome Powell, that part of his speech, he talked about shifting the focus towards rising unemployment. And I think that a lot of people kind of have the suspicion or the sense that unemployment is a lot higher than what many of the people are reporting. So I don't know. I thought that was an interesting development that took place. But as far as inflation goes, inflation's a topic that we've probably mentioned at least a little bit, maybe on almost every podcast episode that we've had. One of the ways that we combat inflation is by raising our interest rates, right? We want to slow down the economy a little bit. When our economy is overheating a little bit, we need to slow it down. And raising rates is one of the ways we do that. And what happens when we raise interest rates? People spend less, companies spend less, earnings end up falling, and stock prices could drop. The opposite is true. When interest rates are low, people are more likely to go out and borrow. Businesses are more likely to invest in whatever it is that they're investing in, whatever product or service that they're providing, whether it's research and development or maybe to expand their workforce, because it's cheap to borrow money, right? So it's important to look at, inflation to see what the effect is. We're basically still at, I think inflation is around 3% now. So it's not quite at the 2% target rate that we keep talking about. And I think it's been around 3% for a while now. So, there's a little bit of pushback to Jerome Powell at the symposium last week because, it was almost as if there was a bit of a victory lap happening when really inflation hasn't changed a whole lot. It's still at around 3%. But yeah, we'll see what happens,